I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Ryan Condron, the CEO of Titan. Ryan, welcome to the show, and thank you for taking the time.
Yeah, thanks for having me.
Very welcome. Excited to dive into the mining aspect in blockchain and Bitcoin today. I'm not as familiar with the Bitcoin mining because when I first got into Bitcoin 7-8 years ago, it was annoying for me to learn how to set up a rig and learn all the intricacies of the electricity power. But from all the technological advancements that have happened since then, it's a lot easier, and you don't really need to have your own rig necessarily. It's hard to compete with these large companies that have giant warehouses that are mining Bitcoin, and there's different ways that other people can get involved as well. So I'm excited to dive into your insights into where the Bitcoin mining industry is today. I would love to kick off our conversation with just a little bit from a high level on what Titan is working on in the mining space, and then we'll dive into all the details.
All right, sounds good. So as you said, mining started out very much as a hobby. I think a lot of us 8-9 years ago, now 10 years ago, were doing this in our additions, in our houses, in our garages, in our basements. And it moved from this hobby into like an industry. Probably 2017, 2018, we started seeing like these huge just mines pop up all over the place. No longer just these massive GPU farms, but just massive ASIC farms all over the place. And now as we start transitioning cryptocurrency more into a mainstream, we're starting to realize that mining really is now key infrastructure, where if these mines go down, then transactions don't get processed. And I feel like we're really on the cusp of this transition.
Definitely. And yeah, it's a lot more than just understanding that people are mining Bitcoin to make money, but really they're the ones that are keeping deservedly they're making money because they're keeping Bitcoin alive. If there was no mining, there'd be no verifying any transactions, no decentralization, and the network would crumble. So it's a lot more than just that. And now, from what I've read, Titan is involved in like private mining pools. Can you talk about what that means?
Yeah. So I've been doing this for a long time, and the mining pool game has always been really interesting. We started out charging 4 and 5% fees. We had different payout models of everything from PPS to PPS Plus to PPLNS to now FPPS. So we've adjusted the models, and different pools have tried different payout schemes and mechanisms. But the one common thing that we've seen through the years is it's a race to zero. So one pool will undercut another pool, will undercut another pool. There will be backroom deals where a large miner will be paying 0.3, 0.4%, where a general member of the public will still be paying 2.5%, 3%. But now we see the largest pool in the world, Foundry, is 0%. And now everyone's trying to race to 0% to match Foundry, and now everyone's left kind of wondering, well, how do we make money at 0%? Because the revenue of a pool is historically, or the profit of a pool is historically always the fee that they charge. So now is always a race to now find, how do you make profit while paying out so much of your revenue to all the miners. So our model at Titan is the idea of a private mining pool. We do really believe that a 0% fee model is not sustainable for very long. And we believe that every large-scale miner for the decentralization of the network really should be running their own pool. So if you're running an exahash to 2 exahash facility or several facilities, we're urging these miners to adopt their own private pool, sign their own blocks, get the street cred, but really help start keeping the block creation distributed.
Interesting. And definitely at 0% it's getting competitive, and you have to find other ways to sort of compete when it's like, well, if it's nothing for everyone across the board, then how do you decide where to mine, and what do you do from there to either cut costs and or make it more profitable? And one of the major differences that I heard from working in the... Go ahead.
I was gonna say the mantra is, if the product is free, then you are the product, right?
Yeah.
And that's the same thing, when you start looking at Foundry and some of these other pools, you have to start wondering, well, what are they doing with your information? And, what's the end goal? Where do they make the money? Because at the end of the day, they are running a business, they're running a company, and the goal is to make money. So that's that's just the underlying truth for all this, and that's why we're talking to a lot of these large miners and say, don't be the product.
Yeah, no, that's a great point, and that's a narrative that I've been paying attention to more and more just in the past few months. With all of these hacks of centralized exchanges and all of these Web3 infrastructures that are really built on Web2, and at some point, through all the social medias that everyone's using every day, we are the product. And I'm always looking for other opportunities to not be the product, to actually get value for something where you pay a little bit to ensure that your personal information isn't sacrificed. So I appreciate that ethos, Ryan. Now, one of the major things I was going to mention about mining is I feel like it's a whole nother kind of calculation from outside of cryptocurrencies, but there are different ways to mine, whether it's through renewable energies or through electricity, and as we're seeing now, volcanoes, and who else knows? I've seen like cooking oil and like crazy contraptions. I don't know if those are feasible for the large warehouse-sized mining facilities that your team is working with. But do you have any insight onto the renewable energies working in Bitcoin mining and lowering the carbon footprint that mining has?
Oh yeah, I mean, this is like 4 or 5 hour discussion. I mean, I guess it boils down to anywhere there is electricity to be found or energy to be found on this earth, miners will find it. That's the game, is finding cheap electricity, stable infrastructure, and favorable governments. So where you might have El Salvador that seems to have a favorable government and they're pushing for cheap electricity, maybe the infrastructure is not there. Or in the middle of Mongolia, you might have cheap electricity and good infrastructure, but maybe the government's not there. And China, we definitely saw that the government was not there, even though they had the cheap electricity and good infrastructure. So there really needs to be a balance of these things. Now, in Texas, we found a balance of all three of them. So now it's becoming a huge hotbed for mining, right? And now it's so much so that the grid is starting to have to adjust, and the power producers are starting to have to adjust for the overwhelming demand for production. Now you have a lot of people having this discussion about renewables. And what's really fascinating about the grid in Texas is they're able to actually work with the miners based on the load on the grid. So miners can instantly ramp up or ramp down depending on what the power producer needs. So in the middle of the summer, when it's hot outside, everyone's running their AC units, the miners will actually ramp down, which will provide more power for consumers on the grid. More power for consumers on the grid. Whereas at night, when it's cool outside, miners can ramp back up and provide a steady purchasing, essentially, of electricity. So a power producer can now run at 100% efficiency or 100% capacity 100% of the time, and there's always a consumer for the power. And this has actually historically been a huge issue with renewable energy when you don't have peak load all the time. I actually spoke a couple years ago at Bitcoin Miami about this, where there's huge solar farms going in Southern California outside of Palm Springs, because the vision of California is to be 100% renewable by 2035. The problem is the legislature has no clue how to do that. The reality is it's a kind of hand wavy where they're buying electricity from other states. They're trying to sell electricity to other states when it's not peak time. They're trying to balance the grid, but they don't have the technology to do that. And Bitcoin mining could be, right now is the only option for something like that, where you can build 100% renewable for peak capacity And then the other 300 days out of the year when they don't need peak capacity, you could be balancing the grid with mining. So at the end of the day, if you really look at the way power grid works, Bitcoin mining is the renewable savior, and not like this, burning electricity and hurting the environment. It's actually the one thing that will stabilize the grid.
Incredible. And from what I understood, some of the FUD and uncertainty around the amount of energy that Bitcoin mining was consuming was sort of coming from outlets that are in the United States. But from what I understand, a lot of the mining, at least throughout these states, like there's a lot of mining in the United States. I'm not sure compared to other countries, but it seems like it's a thriving industry in the States. Is that where some of the companies that you're working with are mainly in the States?
Yeah, so the majority of the companies we're working with are inside the U.S. There's huge miners in Canada. There's huge miners in the Middle East, Russia, Venezuela. There's really massive mining facilities all over the world. There's still some in China, right? But they're quickly turning off and finding other homes. So the United States does not have I guess the United States does have a huge amount of hash power, but they're not the only. We're not the only country that is mining at capacity or at scale. It's really fascinating what you're saying as far as the communication from news outlets and different individuals here in the U.S. that have been talking about renewables and how mining is bad for the environment, and they want to paint this picture that there's like these billowing smokestacks out of a coal fire plant that is polluting, burning electricity to mine these bitcoins that are used on the black web for illegal arms trafficking and drugs, and this is like this grand picture that they want to paint that not only are we killing the environment, but we're printing illegal money for illegal reasons and for illegal activities. It's really silly. Honestly, there's so many false premises that these people start with for the environment, because if you take one step back from that, you say, okay, if using electricity is bad for the environment, why? And they'll say, well, producing electricity is bad for the environment. And you'll say, well, why? And they'll say, oh, because burning coal is polluting. Okay, well, what about all the electricity that's not burning coal? Well, okay, natural gas is a limited resource. And they'll say, okay, well, how much do you actually know about natural gas to say that? How much do you actually know about solar panel production, wind farms, hydroelectric facilities? Once you actually start digging down into all the false premises that they've built this, massive statement on, you'll quickly realize that there's not a whole lot of information backing up the statement. They're just going for the headlines.
Well said. And with the companies that you're communicating with throughout the states, are they at least partially all using renewable energies?
All of them seem to have a mix of renewables. There are some that are strictly on a grid that's natural gas, or strictly on a grid that is renewables. I've seen some facilities that are 100% renewables. Most of them are mixed. And they'll have a complete, most of the large facilities are very professional, and they'll have a complete report of their exact mixture of power usage. And then even their curtailment of when they turn off their facility to help balance the grid. So these things are actively happening, and no one is more watched than the power producers in this country when it comes to regulation. For this part of the ecosystem right now, the power producers are heavily watched, and the reporting from the miners is spot on. So, once again, a lot of the communication I hear about it being bad for the environment, or miners just burning electricity, it typically comes from people that are just woefully uninformed.
Good insights, Ryan. And throughout this year, as you know, throughout 2022, the Bitcoin price was dropping, but I saw some data about how the Bitcoin hash rate continued to rise and was like at all-time highs. And I'm not sure if that's just the competitiveness or the profitability of mining, but maybe you could explain that divergence and the difference there on what's happened this year.
Yeah, so the hash rate on the network is a backwards calculation from the difficulty it takes to find a block. So essentially how many leading zeros there are in the final block hash. And we do a backwards calculation to determine or guesstimate the amount of hash rate or compute power it took to find that block in 10 minutes. So what we see is people are still plugging in miners even though the price is dropping. And the reality is a lot of the miners took out a lot of loans, and they are locked into contracts for receiving devices from What's Miner or Bitmain. And those devices get delivered regardless of what their financial books look like, because they already committed to the deliveries and committed to the purchases, and they borrowed the money for them. So that's why we see things happening like Compute North and certain things at Marathon. And so you see a lot of onboarding of devices, and what happens is if these miners get stuck where they keep receiving devices and they don't have anywhere to plug them in, then it now becomes a deficit where they're paying for devices and they're not able to, have power for them, or they don't have room for them, and a lot of miners have gotten stuck in this cycle where they'll have the machines becomes a huge burden on them, because a lot of these guys still have to pay their electric bills and still have a huge amount of OpEx. 3 or 4 years ago, I feel like it was the exact opposite, where a lot of guys had power and they had space, but they didn't have the machines. So now we're kind of flipped. Now everyone has machines, and there's a huge amount of machines, but not everyone has the power or the facilities for them.
Yeah.
So I don't know if that answers your question, but essentially people keep plugging in machines even though the price is dropping. But I think we're going to see it actually reverse here, because a lot of people can't pay their bills. So a lot of those machines that they plugged in over the past year are going to be unplugged.
Yeah, it's interesting that there's so many variables, because from what I understand, the mining producers, they're always making new models that are faster and more efficient, and you can't really have a miner for more than a few years before the next versions become that much more fast, computation wise to like outbid. And meanwhile, Bitcoin's going through these 4-year cycles. If you buy your miners right when the price is going down, it actually makes it more competitive, because sometimes people lose profitability, but then they can't they can't operate, but then there's less competition. So then the cycle comes back, and more people are like, oh, now there's less competition, let's join in, and then it goes back up again. So I feel like at least the smart companies, they're not thinking, how are we just gonna get our Bitcoin this year and sell it. They're thinking like way down the road about the next cycle and the cycles beyond that, in hopefully mining the Bitcoin and not having to sell it, and just paying for just the basic operating expenses, and hoping that the visions of $100,000 Bitcoin or $1 million Bitcoin will come true.
Yeah, and we'll get there. We're on a cycle. We're in a deflationary system, and I mean we're on a clock. It's every 4 years, as you said. It really shouldn't be that surprising to people. It's really just what do you do in the 3 years in between each of the run-ups, right? And that's what it's come down to, is do you build, do you turtle, do you, what do you do? And a lot of times people are trying to guess the top, and I felt like this was some of the large miners and publicly traded miners, and even some of the large exchanges that we saw, or crypto banks, were trying to guess the top, and just because it was going up in price, and all these coins were going up in price, they invested like they were always going to keep going up. And then the shrewd people and the people that have been through the cycles before are expecting the crash, expecting for the shakeout to happen, like it always has. I think we're on our 4th or 5th cycle now. And this one actually hasn't been as bad as some of them in the past. I mean, keep in mind, we went from 20,000 down to 3,000. Right now we're sitting at just under a third of where we were, let alone like a 6th or a 7th of where we were. So, we've seen a lot worse crashes than this, and, maybe we're not at the bottom now, but I do know that miners have a theoretical limit right now with their OPEX. So miners, even with cheap power, are, producing coins at about $12,000 a coin, maybe $10,000 a coin. Under that, they're losing money. So right now, at $16,000, $17,000 Bitcoin, they still have good profits. So they're still mining and they're still, bringing new coins into the ecosystem. The moment the price drops any lower than 13 or 12 or 11, we're going to start seeing a whole different economics, and we're going to start seeing changes in network difficulty and a whole new shakeout of companies, really.
Well, we'll see what happens in 2023. And now, how does Titan fit into that play? If the price does drop, does that negatively affect, obviously the people that are mining directly? How would that affect Titan if the price dropped to 11,000?
Yeah. Well, miners are going to be looking to optimize, and they're going to be looking to squeeze every last penny in optimization out of their pool partners, out of their devices, out of the facilities, and renegotiating with their lenders. So for Titan, we offer a very competitive pricing model with our private pools. We really don't think the 0% fee model for public pools can last very long. I mean, I could be wrong, but it just doesn't seem sustainable. So I'd imagine, 3 years from now, 4 years from now, public pools should be few and far between, or just not really in the running anymore. I'd imagine most large at-scale miners will be running their own pool. I mean, that's the vision that I'm hoping for, and that's what we're banking on. So we're positioning ourselves to provide those private pools.
Awesome. And moving forward to 2023, with that vision in mind, what's sort of the next stages of the roadmap of, public releases or adaptations to where you see the industry going?
2023 is a hard one because we're still in the shakeout, right?
Yeah.
Like no one saw. I mean, a few people saw Celsius coming, but it took a lot of people by surprise. What's going on with Core? What's going on with Compute North on the mining side? What just happened with FTX? I don't think this is the end of it. As the market contracts, we have all-time high inflation. We have high interest rates. We have huge amounts of layoffs. The market is swinging, the other way. We saw a huge upswing in the market in 2021, and the economy, a huge upswing in the economy coming out of COVID, and now we're seeing it come back the other way, like a pendulum with a vengeance, right? So 2023 is going to be a hard year, I think. I don't think it's going to be all unicorns and rainbows and to the moon. I think it's going to be more crunch time, and people really need to plan ahead with their capital to make it through the as we call it, the crypto winter.
Good insights, and I think that it's better to be realistic than overly optimistic. But I'm sure you would agree that eventually, in a couple of years, we'll be back to where we were, or even beyond that.
Yeah. What we're doing is we're keeping our heads down and we're building. We're working on a hash rate marketplace through the project called Lumerin. which is for miners to get the utmost of profitability out of their hash rate so they can feed their hash rate onto a global hash rate grid, which we're calling the Lumerin Marketplace. And that allows for anonymous, decentralized buying, selling, trading, and transmission of hash rate. So that's the future of where we want to see things go. We want to see if there are public pools, which aren't selling their hash rate to the public grid, then they would be mining with their own private pools. So that's really the vision that we have, is seeing this idea of hash rate as a commodity, so you can start building financial products on top of hash rate.
Very cool. I'm interested.
But that's a whole different discussion.
Yeah, no, I'm interested to see how that grows. Ryan, what's the best way for people to learn more about these private mining pools and follow along with Titan's updates and these roadmap points that you spoke about?
Yeah, you can check us out at titan.io for the pools. If you're interested in the decentralized routing of hash rate and the marketplace and the more like futuristic ambitions we have for the space, that can be found at lumerin.io.
Very cool. Thank you so much for all the insights into the mining space. I'm learning a lot. It's a whole nother world from just buying Bitcoin and holding it, but it's important to understand because without it, there would be no Bitcoin. So I do appreciate you taking the time. I will leave the Titan and Lumerin links as well in the description box below. All the best with Titan moving forward into 2023, and let's follow up in the near future.
Awesome. Thanks, Ashton.